Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 13th of April 2017, presented by myself, Phil Carr. So during today's session, we will be covering live market analysis. We will go through a watch list of trading opportunities, a forecast of where we expect gold, silver and oil to be heading next, answering questions, and of course we will also be providing live support as well during the course of today's webinar. So first of all, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agriculture markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. For further information on the Gold and Silver Club and our expertise, please do visit www.thegoldensilverclub.com. So with that, guys, before we get into it, before we go over to the charts as well, we'll just do a very quick check-in that the sound is okay. Yeah, okay, fantastic. Adinda, just a very quick check. You can still hear me okay? I can hear a little bit of background noise coming in. Yeah, hi there, Edward. Okay, perfect. Okay, great. So with that, so quickly looking at the overall performance of the markets year to date at the moment, this really gives us a way to look at the bird's eye view of the market, how they've performed so far in 2017. I'm sure you'll be very aware if you've been watching the markets over the last 24 hours for the breakouts that we've seen in gold, in silver, on a number of different markets. We've seen safe haven markets get bid up here. We've seen geopolitical tension escalate over the course of this week, and as such, the current top performing markets are certainly the metals. So palladium is up over 17.5% so far in 2017. Silver is now up over 15%. Gold up over 11% in 2017 so far. Platinum not too far behind, up over 7%. So really a lot of the metals here, the precious metals in particular, are leading the way with the gains so far in 2017. We'll explore that more on the charts very shortly. The weaker markets for this year, the losers so far, have been natural gas, which is down over 20% on the year, sugar, which is down over 13%, cocoa, which is down over 7%, oil, which has managed to retrace a lot of the losses actually, but at the moment oil is currently sitting down 4% on the year. WTI crude oil and Brent crude oil is currently down at 2.9%. With that, the S&P 500 is currently up 4.5%. Dow Jones is up just over 4%. So that's just a bit of a bird's eye view of the markets, how they've performed up until today, what the best performers are at the moment. So with that, guys, we'll go over to the charts and I'll talk you through certainly gold, silver. We'll have a look at oil, platinum, palladium. We'll have a look at any additional markets, a featured market as well. Okay, so first of all, we'll go over to gold here. So gold, certainly over the last 24 hours, we've seen quite the spike on gold here. We've had a resolution of this major overhead level of resistance. You remember this time last week, we were coming up for a test of the 200-day moving average. We've now tested that a number of times, and finally that level got broken to the upside just on Friday. It gave way. We then formed a bull trap, so it retraced into the close, broke down slightly over the course of Monday, but then on Tuesday and Wednesday is where we've seen geopolitical tension increase between the US and Russia, and now North Korea. Tensions are now continuing to accelerate, and with that, we have seen significant breakouts here on gold. The US dollar dropped dramatically yesterday off the back of Donald Trump's comments yesterday that he wanted to see a weaker dollar. We've seen the dollar break down significantly yesterday. Gold at the moment is trading at 5-month highs, so currently trading at 1,287 US dollars per ounce. It's broken and closed above the 200-day moving average, and you can see here where currently it's continuing to build up this momentum to the upside with very little pullback so far. However, yesterday it was sort of toying with this monthly pivot, the upper end of this trend channel, going back to the highs at the end of July, matching up to the highs from the October stroke November, actually November elections here, where we saw a spike high on the Donald Trump win, and then subsequently we saw over a 2,000 point correction for gold. What is interesting right now is now gold trading just under 1,290 US dollars per ounce is trading, was retraced pretty much all of the losses it gave back following on from the election of Donald Trump here. So it's back at those levels going back to November, and it's now of course going into April. So within approximately just about four and a half, 5 months now, it's managed to retrace all of those losses to the upside. So it's been an impressive gain here for gold so far in 2017. This move certainly over the last few days, breaking close above the 200-day moving average, has got more investors involved in the buy side of this market. The momentum is certainly there at the moment. And what you'll tend to find is now that we're going into the Easter weekend at the moment, a lot of traders are not going to want to short gold with the current geopolitical tension in the backdrop as we go into the Easter weekend. So the majority of markets, apart from currencies, are closed tomorrow. Commodities are closed, stock markets are closed tomorrow, and they won't reopen now until Monday after today. So with that, there's going to be a lot of traders who are not really brave, and I don't blame them, to go in for a sell short here on gold prior to the weekend, given what the overall backdrop at the moment with geopolitical tension is. With that, what does that mean on the buy side then? Should you be buying gold at the moment? Should you be getting into a position right now? What I would suggest is on gold at the moment, it's really ideal for those who are already in a position right now in order to be able to just take advantage of the momentum to the upside. Since we've broken out, closed above the 200 MA, good momentum behind it at the moment. You need to be careful at this point in time if you're looking for any fresh positions at the moment. Short term, certainly gold is overbought, but it can remain overbought and still go up in this current condition with the current geopolitical backdrop that we've got right now. It can still continue to move higher. In terms of next levels, what would I look at? 1295 and 1300 certainly would be the next key levels of resistance. What I would be watching out for here would be the potential for better entries here on gold at the moment. This overall momentum to the upside. Previously, if you go back to previous similar situations in the past, where we've seen these sudden spikes to the upside on the prospect of war, to be quite frank, when we've seen this happen previously, going back to historical points in time, with the charts and also just marrying that up to previous events like this, often what you tend to see is momentum to the upside can be relatively short-lived if things start to calm down. Although this could be slightly different, this situation at the moment, as things are starting to escalate over the last 24 hours. But you need to be careful here. Often you get a much better price to enter into a position like this on gold rather than buying it right at the highs. Now, certainly I could see the potential for gold to go up higher at this point in time, but I would be very careful if you're looking to enter at gold right at the highs here. Just really trying to catch the momentum at the moment. You could potentially get a bull trap here. You could be caught in a position where you're buying right at the top of the market at the moment, particularly as it's just broken out to 5-month highs. We haven't really had much of a sort of corrected pullback over the last couple of days, given the breakout that we've had to the upside on gold at the moment. So I'm watching this market very curiously right now. Again, if you're already in a position on gold, you can just trade up your stop loss and take advantage of the momentum right now. Looking for fresh positions, which a lot of traders are around this levels, I would be careful. I don't think many traders will short gold here coming into an Easter weekend because of the risk over the weekend of potential gaps on the open next week. We might see a bit of profit taking into the close today as well, given that gold is trading around 5-month highs at the moment. What I would keep an eye on certainly at the moment as well is the dollar. I mean, the dollar did break down yesterday quite significantly after it was holding around the 50-day moving average throughout most of the day. It broke down, came back to the next level of support around the 100 level. That's getting a bit of support at the moment. You can see this underlying level around the 99.90 zone at the moment. We're getting a bit of a pop above that zone right now. We'll continue to watch gold and the US dollar and see how it performs over the course of the US session today. Gold's a little bit muted at the moment, but we had this situation yesterday where gold was muted throughout most of the day until approximately just after 8 o'clock London time. Then things really started to move on this market. So we could still see more movement later on in the session, but right now it's a little bit muted, not really too much going on here for gold at present. But then what I would look at is moving over to silver. Okay, so silver is interesting right now. If we go over to the higher time frames, now this is something that we've discussed previously in the past, and I'll come back to this right now because it's relevant. So silver, if we go over to the monthly chart, you will note that this is breaking out from a what I would consider to be a bull flag set up on the monthly chart, which the overall price structure here is something that we identified going back to the end of January, where we did get a essentially a breakout after a correction which lasted 6 months here on gold, following on from Brexit, continued to break down all the way into the end of December off the back of increase in interest rates. But we then saw a very strong month over the month of January, closed right at the monthly highs. Over the month of February, broke out from this pennant, then pulled back over the month of March, only to then create a dragonfly doji on the monthly chart. And we're just about clipping the upper end of this resistance at the moment on silver. On much higher time frames, this certainly looks like a bull flag formation, holding all this underlying support here, just going back to November of 2015 here, which was the first interest rate hike. And the second one was then at the end of last year, end of 2016. You've got major underlying support, and you've got what I would consider here to be a bull flag on the monthly chart, and we're starting to break out above that zone. So 1850 at the moment, we're on the brink of a potential breakout from this layer right now. You can see there's very clearly a neckline on the monthly chart as well. So I'm looking for the potential for a lot more upside here on silver in the months to come here. It's certainly on higher time frames, finding major support where it needs to get supported, and it looks like it's on the brink of the potential breakout at the moment. Although timing the entry is always better with silver. Ideally, silver, most of the time you want to get in on the dips and the pullbacks rather than buying it at the highs. You can get caught out sometimes buying it right as it's breaking out, so 3-4 month highs. You need to be a little bit careful. Often silver is quite volatile, and as such normally does provide better opportunities to get in. Normally you're better off getting in on a pullback and buying at value rather than trying to get a position on right at 3-4 month highs here. You can potentially get caught out in a bull trap, but at the same time, on higher time frames, if you're willing to be patient with these trades and go in with more of an investment approach, we are breaking out from some major levels here, and we'll see, because we've now had a definitive close again here above the 200-day moving average, and it looks like, unlike last week, we'll also get a weekly close above the 200-day moving average at the moment, because silver won't be open tomorrow, and potential for a 3 white soldiers formation and additional follow through today. So overall, I think short-term momentum is favoring silver to the upside as well as gold at the moment. In terms of being a buyer right now, ideally would have bought back here around retest of the 50-day moving average. We've discussed this before on FX Street, where the 50-day moving average is very important for silver. Often once you get a break and a close above that level, it can be a major buying zone, particularly where you've got the 50 MA crossing above the 21 and they're marrying each other. They're at similar levels here, which we've had twice now within the last couple of weeks. Going back on the chart, we identified this previously on a session where, if you go back to 2016 January, where we had a breakout above and closed above both the 21 MA and the 50 MA after being below them throughout most of December, we really got going. That was the case again going back to March of 2016, which caused a significant breakout, and then again going back to June of 2016, once we broke and closed above both of those moving averages, the 50 and the 21, this led to a runaway move to the upside. So we've retested those levels twice within the last couple of weeks here, and silver's up and running at the moment, but we'll see how much more this has to follow through. Now, in terms of a market that does tend to lead gold based in US dollars, is gold versus the euro. And gold versus the euro at the moment has actually broken out more than 5-month highs. I mean, where it's sat right now is at the highest level since August of 2016 here. So approximately we're up to around 8-month highs at the moment on gold versus the euro, and I don't see much resistance in the way for this market right now. It's coming up to a little bit of a consolidation zone going back to the highs here of July and August of 2016, but I mean that really meets approximately the monthly pivot around 1,220. So I would suspect that gold could have a short-term momentum to the upside. I'd be careful buying it right at the highs here. You want to try and position yourself to buy on pullbacks rather than getting in at the highs, unless you're willing to be in and out relatively quickly, or you can position your stop loss to a point where it's a risk-free trade relatively quickly, but it's been an impressive move. Gold priced in euros here, full on V-shaped reversal, breakout. In fact, gold versus the euro broke and closed above its 200-day moving average going back to about mid-March here. So it did it much earlier than gold did versus the US dollar. It's been a very impressive breakout and follow through over the last week. This week has been the definitive week here for gold euro. It's been held back here by a lot of overhead resistance here at the 1190 zone. You can see that. And then this week, V-shaped reversal pattern broken out from the neckline, and now it's really up and running. So I don't see too much in the way of this market at the moment from going short-term higher here, but I will be watching this very curiously as we go into next week as well. So ultimately, short-term, I'm looking for more momentum to the upside on gold, silver, gold, euro right now, unless we see something massively change throughout the US session this afternoon. But at this point in time, it does look like we could see a bit more upside. Certainly 1295 for gold, 1300 zone is not too far away. We discussed that last week, that if we were to get a breakout and close above that 200 MA major resistance, it opens up the door to 1300 here for gold. That's what I'm looking out for at the moment. Okay, so now also moving over, we'll move it over to, right, one of the featured markets we'll have a look at as we go into next week. We just want to go over a little bit more detail is sugar. We discussed this last week, and just coming back to that, because pretty much the bounce that we were looking for in this market has occurred now. So just moving over to sugar, you can see the 16 zone, which we highlighted going back to support of 2013. A lot of bounces at this level previously, resistance back in 2014 as well, 2015, support in 2016. It's been a major level here on sugar for a while, and in fact we have built up momentum over the last week. Sugar has found support at the 16 zone. It's popped to the upside today. What I like about sugar is the weekly time frame. So if you look at this, you got a double rejection candle which is formed here at the moment. A tweezer bottom is its technical name here. So I will be looking at that for a potential follow through move as we go into next week. If we do close like this, so we've got two rejection candles on the weekly chart at the all important 16 level. Now I am watching this just for any false breaks at the moment, because we've got this overhead trend channel that sugar has been struggling with more recently. So every time it's come up to test the upper end of that zone, it has found some resistance there, but it seems to today be having a go at breaking out. So far it's had a break above the 21-day moving average, and we'll see if it can follow through at all. The downside risk would be that it could be another bear flag here and just break down and come back down to the 16 zone. If it did that, I would look at the potential to take on a position at the 16 level aggressively around that zone on any confirmation. But at the moment, it might be that this is actually the low in sugar at the moment. This weekly low that we're forming, two rejection candles on the weekly chart, a tweezer bottom here, could be the low that we're forming right now. So I just put sugar on your radar there. If you do trade sugar, if you're looking at other markets which could have good value to buy, this is quite nice where it is at the moment, approximately trading around the 17 level at the moment. So it's had a nice bounce on the 16 zone. Also moving over to oil. So oil's the rally here has been pretty impressive here. There's been a few rejection candles along the way, but none of those really have given way to the downside so far. Anyway, we haven't seen much of a pullback. It's been an incredible move on oil here so far this month, up over 5%. The oil move to the upside. Short term, it is a bit overbought right now, but it's pretty relentless to the upside at the moment. Oil, it's not really running out of steam here. It's continued to follow through. Even yesterday, after the oil inventories, we saw a bearish close on here, but it hasn't really followed through or broken down so far. And we're back right within that zone that we discussed previously, the zone that we consolidated with oil through 3 months that finally broke down. And in fact, to show this on the weekly chart here, so you can see going back to the weekly where it found support right at the lower end of the trend channel. And this is noteworthy moving forward. I mean, there was obviously a lot of traders looking at this zone on the weekly basis. It rotated all the way back down to the lower end of this weekly trend channel. We had a bullish engulfing candle form a couple of weeks back on the weekly. That followed through, broke above the high here. And now we're getting right back within the previous trading range, V-shaped reversal. And we're back at $53.65 a barrel. In fact, the highs, I think, over this week, we just about breached $54 a barrel. So it's been an impressive move and a snapback rally here for oil. We don't really want to be on the wrong side of that. So at the moment, we've had quite a significant retracement to the upside. So what can we deduce from this moving forward? We're back in the range now, essentially. I mean, if we do get a break and close above $55 per barrel, I would expect, you know, the potential to get a full-on follow-through here back towards the upper end of this channel. I mean, at the moment, we might just find we get a consolidation formation again between these levels, but we're at a time of year where typically oil is bullish as we come into May, June, July. Normally this time of year, especially May and June, are bullish for oil. So with that, we could have more follow through here in the weeks to come. So also watching this market very closely right now for the next trade opportunity. I think short term it's getting a little bit overbought, but oil can go through long periods of where it's still overbought and continues to rally. So I wouldn't necessarily say that is a reason to look for it necessarily to run out of steam at the moment. Short term overbought, but it could still go higher from here. Watching this market very carefully. There is some overhead resistance taking it back up to this previous trend channel, which is where essentially that we saw a breakdown from. So I would just delete this and just show this overhead level. We had quite a few levels that where it spiked up and then managed to find resistance, and we're sitting at that zone right now. Now it would depend how oil goes over the course of today. I think if oil was to retrace today and close or break certainly below yesterday's low or close below it, it could indicate we've got a short-term top. There might be a sell short opportunity to take oil down. But if it continues to rally, takes out yesterday's high, well then we're going to target $55 per barrel to the buy side, and momentum would be in the favor of the bulls here. So I mean, it still is in favor of the bulls. The path of least resistance for oil is up at the moment. So watching this market very carefully as well. So overall, it's been a pretty strong week for oil. It's been a strong week for gold. It's also been a strong week here for silver as well. Now, if we move over to platinum and palladium. So first of all, we'll go over to palladium. This is palladium, which is currently up over 17% in 2017. Currently consolidating right near the highs, around $800 per ounce, and you can see where it's just been ricocheting, consolidating over really the last week or so here. There's not really too much to be done at the moment. A lot of the move has taken place via gold and also via silver, but just monitoring this to see if we can breach yet again above the highs of 2017 and breach 815 zone here at the moment. Also moving over to platinum. Very much like gold and silver, platinum has also had a surge over the last week. Very choppy price action, though. Certainly nowhere near as clean as the move that we've seen on gold over the last week. This breakout to the upside has been pretty choppy. We broke out to the upside, retraced, sold off, broke support, retraced, and it's been really choppy. We're currently sitting just underneath the 50-day moving average at the moment. So we're just consolidating below that zone right now. So at this point in time, yeah, platinum, we'll see how this continues to develop. I would suggest at the moment the momentum is better with gold and silver, but platinum, if it can break above the 980 zone, close above it, has the ability then, or the potential then, to continue and get a retest towards the highs of 2017 as well. Although I would favor the metals with more momentum at the moment, which currently is gold, and then silver as well has also a lot of momentum behind it right now. I think that's it in terms of the featured markets. Actually, I will show you one more market which I think might be just worth you having on the radar here, just from educational point of view as well. Here is soybeans, and soybeans has done a classic bear trap here over the last week. So soybeans has come back down a little bit like sugar in this respect to a major level of underlying support at the 935 zone. You can see here where previously this has been a major level of support on the chart. 2014, also 2015, there's been a major layer of support, and also support in October of 2016, a couple of retests. So what it did, it broke below that zone. Classic. So it broke below that zone, didn't hold just at that zone spot on. So it would have just essentially taken out stop losses below that zone, spike low here, only to retrace into the close here earlier on in the week on Tuesday. And then on Wednesday here, broke above the previous day's high. And then today we're getting some good follow through. And I would suggest the risk to reward potential on this trade is pretty big right now. It's very oversold, soybeans at the moment. And also off the back of the USDA report earlier on this week as well on Tuesday, that's been a bit of a whipsaw move, which is classic normally for a low. So normally when you do see a low get put into wheat, corn or soybeans, normally what it will do is it will break through a low, slice below it, because normally it doesn't just hit a level of support spot on and then just reverse. It normally has a little bit of a shakeout, that zone shakes some stops out, reverses, you see buyers come back in, develops a bull trap, and then sellers who've been caught selling into a trade then start to get stopped out of their position. The market starts to accelerate more to the upside as you get short covering. So essentially at the moment, it looks like we've got a lot of momentum behind soybeans right now. It's moving pretty well to the upside. There could be quite a good risk to reward from a good area value here. Obviously, it's very clear where you position your stop loss below the swing low, the new spike low. You look to take advantage of that momentum to the upside. I see the same thing happening on wheat and corn. I like wheat actually quite a lot here, but also I see soybeans as a good risk to reward potential. Okay, so that's another featured market just to put on your radar as well. Okay, fantastic. So with that, guys, if you enjoyed today's analysis, you'd like more of this on a regular basis, if you'd like to join our live trading rooms, join the week as well to get exclusive access to our private members live trading room. All you need to do is go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. So it's www.jointhegoldandsilverclub.com. What do you get by being a member? Essentially, you get access to our trading strategies and our online training course. You get live trading rooms during the week and our webinars, recordings of every single session. You get live trade setups ready to implement, notifications so you don't miss out on trades, which includes exact entry, exit, stop loss, trade management, the inside track, so week ahead trading plan every single week with a trade watch list, and access to our Private Traders Academy members website as well with a whole host of resources. So again, you get access to our live trading rooms during the week, which are also recorded as well, so you can rewatch the recording if you happen to miss a session. You get access to all of our email and alerts on every single trade, so every single entry, exit that we're getting into of every single position, you get kept updated with. You get commodity research and market insights, so you get exclusive access to our proprietary trading research to help really boost your win rate and make sure you're getting on the right side of positions. So again, our private members live trading room includes all of the below. So access to the trading strategies online training course, access to our live trading room webinars, live trade setups ready to implement, notifications so you don't miss out on trades, exact details of where to enter, exit, place a stop loss on each position, and inside track, a week ahead trading plan and watch list for the week ahead, and also access to our Private Traders Academy members website. So again, that's just www.jointhegoldandsilverclub.com. Okay, fantastic. So with that, I wish you all good trading, guys. Have a fantastic Easter. And of course, we'll catch you back here next week for the next session. So with that, guys, good trading, all the best, and we'll speak to you real soon. Thanks, everyone. Take care. Bye-bye.